The global financial markets are currently in the midst of a cataclysmic upheaval as a result of documents that have been released from a recent conference of the BRICS nations, which contain information about a scheme of unparalleled scope. The digital asset that will be used to collateralize the gold-backed reserves of the alliance has been determined to be XRP. To be honest, the ramifications are absolutely mind-blowing. The US dollar has functioned as the global reserve currency for decades, providing support to the petrodollar system and regulating the flow of trade on a worldwide scale. However, in recent developments, there have been reports that Russia and China, two of the most powerful economies in the world, are in the process of finalizing a framework in which XRP functions as the central ledger for their gold holdings, therefore effectively setting up a new standard in international banking. The enormity of the reserve required, as well as the strategic commitment to the adoption of the asset on a large scale, are both indicated by the documents, which purportedly establish a precise price of $33,000 per XRP as the official buy-in threshold. The move has been described by many in the know as the ultimate geopolitical endorsement of cryptocurrencies. It has changed XRP from being a financial utility to becoming a symbol of state authority and monetary sovereignty. At the beginning of the novel, the BRICS summit is being meticulously planned. Officials from the 5 participating countries, Russia, China, Brazil, India, and South Africa, are believed to be in discussion about procedures that will minimize their reliance on the US dollar and increase their collective economic influence. The decision to select XRP was made with intention, as sources have reported. It combines speed, liquidity, and regulatory transparency, which aligns with the Alliance's vision of a contemporary digital-first financial infrastructure. XRP is different from other cryptocurrencies in that it was really meant to be used in cross-border payments on an institutional scale. In addition, it has the capacity to manage the massive transaction volumes that are required for sovereign gold-backed reserves. The $33,000 pricing point was not chosen at random. In actuality, it is a reflection of the calculations carried out by central bankers in order to make sure that there is enough collateral coverage while also ensuring that there is optimal liquidity across numerous jurisdictions. This exact assessment is being seen by analysts as a form of strategic calibration of monetary influence. A combination of sophisticated financial expertise, technological advancements, and, not to mention, strategic geopolitical positioning. The story rapidly gains attention from all around the world, beginning with the murmurs of conjecture that are shared amongst journalists that cover the financial sector and crypto analysts before going on to become a viral sensation on social media. A combination of gold, national reserves, and XRP has produced an unparalleled scenario in which a decentralized digital asset serves as the cornerstone of a monetary system that is backed by a state, thereby truly threatening the supremacy of the US dollar. It is important to note that market observers have pointed out the fact that such a mandate indicates that there are transactions that amount to hundreds of billions, if not trillions, of dollars. This, in turn, effectively establishes the largest coordinated liquidity pool in the history of cryptocurrency. Right away, institutional traders, hedge funds, and sovereign wealth funds start to create models of scenarios in order to gain a better understanding of the possible consequences for reserve strategies, raid finance, and global currency movements. The narrative does not revolve solely around the cost. It has to do with authority, influence, and most importantly, the reorganization of the credibility of the petrodollar system, which has been considered the backbone of the United States' economic dominance for quite some time, is now being seriously questioned. In the process of establishing an alternate settlement and reserve network that circumvents the banking system of the United States of America in its entirety, Russia and China are literally tying their national reserves to XRP. The old system's exclusivity is increasingly eroded by every transaction, every reserve allocation, and every gold-backed XRP transfer. According to reports, the senior management of multinational banks are conducting emergency strategy sessions in an attempt to predict the impact on the market and to determine whether or not they need to purchase XRP on their own in order to avoid being excluded from this burgeoning BRICS-led settlement infrastructure. The narrative of national acceptance contributes a whole new level of credibility to XRP, shifting it from being simply a speculative asset to becoming a tool for macroeconomic strategy. To be perfectly honest, the psychological impact on markets is genuinely rather significant. Investors and traders are now beginning to respond not only to rumors, but also to actual geopolitical documentation that indicates a coordinated, state-level adoption of a digital asset. The $33,000 price point for XRP serves as both a psychological anchor and a functional standard. In the cryptocurrency sector, hedge funds are frantically trying to secure their holdings, retail investors are attempting to predict institutional movements, and cryptocurrency exchanges are facing an unprecedented amount of volatility as well as trade volume. As a result of an increasing amount of capital flowing into XRP in order to satisfy reserve requirements, a feedback loop is being fed by every increase in usage. As a result of the increase in its liquidity, the network is further validated, and the adoption of other countries that are observing BRICS as a model is being accelerated. The analysts' predictions of cascading repercussions throughout the global financial sector suggest that traditional currencies may be placed under strain as reserves slowly shift their focus to digital assets. The engaging nature of the operational mechanics of this project is equally as remarkable. Through the use of XRP's blockchain architecture, it is possible to achieve quick, secure, and transparent settlement across a variety of national jurisdictions. BRICS countries can achieve more efficiency in reporting, settlement, and cross-border trade by using a single digital asset as the ledger for gold-backed reserves. This eliminates the inefficiencies that are associated with traditional correspondent banking and delays that are caused by currency translation. A hybrid system that brings together sovereignty and efficiency is created by the centralized planning of the alliance, which is paired with the decentralized characteristics of XRP. This approach has the potential to act as a prototype for various regional and economic alliances, according to industry analysts, and it might lead to the development of a multipolar global financial system that is based on programmable blockchain-native assets. In the meantime, the ripple effect is apparent throughout the whole investing environment. Private financial institutions, multinational enterprises, and sovereign wealth funds are already beginning to make adjustments to their portfolios in anticipation of the expected inflows of XRP. Analysts have posited that if the BRICS countries were to purchase this cryptocurrency by themselves, the price dynamics would be driven up far beyond the $33,000 anchor point, resulting in both opportunities and volatility. As the narrative of XRP as a geopolitical and financial power tool becomes more widely known, social attitude becomes more and more bullish. The narrative is further amplified by cryptocurrency commune, the size of the liquidity involved, and the strategic rationale behind the decision to choose XRP over competing networks. XRP is shown as a token of cryptocurrency that has been transformed into a representation of financial independence, and that has the potential to serve as the foundation for a new economic system. Observers in the regulatory field also pay attention. In non-BRICS nations, notably those in Western economies, governments start to evaluate the consequences of sovereign digital reserves that are administered using a cryptocurrency. While there are some regulators who voice concern over the issues of oversight, systemic risk, and geopolitical implications, others see the likelihood of digital native assets being included into official financial institutions. There are reports that are starting to surface regarding task teams that are currently in the process of examining the possibilities for complementary adoption, countermeasures, and even strategic partnerships, all of which are intended to guarantee participation in the XRP-backed financial networks that are currently in development. To be honest, the geopolitical and financial stakes have become rather transparent at this point. XRP has evolved into something more than simply a trading instrument. It has evolved into a mechanism through which national strategy, gold reserves, and digital finance all come together. As whispers begin to spread regarding the mechanisms underlying the allocation of the national reserve, the narrative becomes increasingly complex. It has been claimed that each BRICS nation is estimating the number of XRP tokens that would be required to completely back their gold reserves at the $33,000 valuation, which as a result establishes a framework of tremendous liquidity concentration. Smaller BRICS nations are essentially forced to follow in the footsteps of Russia and China, who are the leaders of this movement. This in turn generates cascading demand and contributes even more to the consolidation of the position of digital assets in the global financial system. According to the opinion of financial experts, this is actually a process that reinforces itself over the long run. When XRP becomes an essential component of national reserves, it also improves the